To begin with, I would like to invite the Polish ambassador, Maciej Ruczaj, to give our opening speech and kickoff of the conference. Welcome to the stage, Maciej.
Damy a pani, szanowni państwo, ladies and gentlemen, good morning. It's a great honor and great pleasure to speak at the opening of Finweek conference, and I'm very happy that Polish Embassy in Bratislava is one of the major partners of this important event. As probably the majority of the population, I'm just a consumer of financial services and not pretending to be an expert in any way in this area. But I do acknowledge that from the perspective of ordinary customer, ordinary user of those services, they affect my everyday life today. And when I looked at the agenda of the Finweek, I realized that what are you going to talk about will affect my life and the lives of any other ordinary customers tomorrow. Again, speaking from the perspective of the ordinary user of those services, I must say that there is a big, let's say, geographical change happening. We Central Europeans no longer need to travel west in order to discover new services and new technologies connected to financial services. But I would say that from my perspective, our region is now leading, actually, or showing the way for the others. From the perspective of Poland, Polish fintech industry is developing very dynamically in the recent years. Over the past 5 years, the number of fintech companies in Poland has more than doubled, from around 160 in 2018 to more than 350 in 2023. Of course, there are several factors behind this growth. First of them being, of course, the overall excellent performance of Polish economy in recent years. There is, of course, the increasing demand for technology-enabled financial services, also accelerated by the COVID pandemic and the change of the customers' behavior forced by the pandemic. And last but not least, there is a large number of highly skilled experts and technical university graduates that make this change and these innovations possible in Poland. I will talk about this briefly tomorrow during a networking meeting for Polish and Slovak fintechs. For those who are interested in the Polish fintech sector in more detail, I highly recommend a report entitled "How to Do Fintech in Poland" by Fintech Poland think tank. It's a very interesting read. With all this being said, it's small wonder that there is a very substantial Polish participation in this event. As far as I know, there are more than 10 Polish fintech companies taking part in Finweek Bratislava, which clearly indicates that the successful cooperation between Poland and Slovakia take place not only in this kind of traditional sectors like transportation or trade, but also in an innovative sector with high added value. Ending on a more personal note, it's actually my first public appearance here in Bratislava in the new role as the Polish ambassador, and I think it's a good place to start my mission among so many creative people that will shape my and our tomorrow. Thank you very much.
Thank you very much, Mr. Ambassador. Now I would like to invite the first panel for the panel discussion. The current state of the digital euro in the European Union, legislation, concerns and benefits. The panel members are in no specific order. Dusan Ruczaj, Aniko Shombati, CDO, Executive Director for Digitalization FinTech Development. Dusan Ruczaj is a member of MBS Bank Council. Jonas Gross from Germany will join us online. He's a chairman of the Digital Euro Association. Peter Paulus, head of the financial department in the representation of Slovakia in the European Union, will also join us online. Vladimir Vanya, chief economist of Globsec. Welcome, all panelists. The first question for today's panel discussion is a very broad question, and I will give that question to all our three speakers to hear their opinion and their thoughts. Do we need a digital euro? We will start from the left, from my left side. So please, Dusan Ruczaj, representing NBS, the National Bank, do we need a digital euro?
Dobrý deň, prajem. Good morning. Thanks a lot for invitation for this conference. As a representative of the National Bank and as the Eurosystem as well, I will try to answer your question from different point of view. Do we need digital euros? If you think the central banks, of course we need it. If you think the citizens of European Union or the Eurozone, I'm sure that the citizens need it. If you think the merchants or intermediaries, I'm sure that they will appreciate it in the nearby future, because the project has several advantages. As it is explained, as you will hear it in the next weeks and months, there are three answers to the why. The first one is the natural development. The natural development of the means of payments, development of the payment services. Everything is going more and more digital. The classical cash is going out. Less and less people, especially the young people, are using the cash. And the cash is the important monetary anchor for the central banks in the banking system. We can't simply see that the cash is going out, that the Bitcoin, stable coins, private digital currencies are coming in. That's not only opinion of the Eurosystem, that's the opinion of the central banks worldwide. I remember some figures I've read recently. 86% of the central banks in the world are investigating or preparing the CBDCs, digital currencies issued by the central banks. So, first question, the natural development, the cash or the currencies are going more and more digital, and we as the central banks are obliged to offer some digital form of the banknotes or coins you are using today. As one of the slogans I've heard recently, it was said that digital or physical, it's still the same euro. You will hear it more times in ongoing weeks and months. And when I thought about it, I found an example comparable with something we use every day. They are the watches. 30 years ago, we had the watches with arms, and now we mostly have the digital watches. But the time remained the same. And that will be the same with the euros. Digital or physical, it will be the same euros. We will not replace the banknotes and coins. We will add another form. The second why, to be short in this first answer, make the life much easier for the citizens, because today when you are entering the restaurant, most of you are looking at the door. Which credit card they accept? Do they accept cash? How high would they like? I will pay. After several years, when the digital euro will function, it will be the legal tender. It will be accepted everywhere where you pay with cards or other means of payments, or where you pay with cash. You will no more put yourself the question which kind of payment you will use. The last, which is not the question of the citizens, but perhaps the question of the central banks, the third reason, increase the resilience of the payments environment in Europe. Just now, the biggest payment schemes are offered by non-European providers. And the decision makers on the level of central bank and European Committee, they are of the opinion that we have to increase the resilience of the European payment environment. We would like to have some scheme which is really European, and it's run by European authorities.
Thank you for a very good introduction to the digital euro. The word goes to Aniko Sombati.
Thank you very much, and welcome everyone. So I'm from Hungary, and I would like to represent a little bit different view from what you have heard. So first of all, of course, the central bank digital currencies are the future form of money. So we can say that maybe approximately 10 to 15 years, we will have digital currencies. The question is what type of digital currencies do we have? And in this regard, the question is, do we really need, or do you really need the digital euro in that form that it is proposed by the European Commission today? So in Hungary, we started to explore the issue several years back and implemented a design framework consisting of 7 steps. And our first step is the question, what is it for? What is the main motivation for a digital central bank digital currency? Is there any serious market failure that the market participants cannot resolve? Or is there any really serious policy objective from the central bank or from the government's point of view that would legitimate such an intervention to the already working market environment to introduce a somewhat competitive product compared to present market situation? And here we really need an honest answer to this question, because this answer will drive the whole decision on what form, who to participate with, what kind of properties this digital money will have. So in this regard, we have heard some examples already why the digital euro could be beneficial, so that it could protect the monetary sovereignty of the Eurozone. But do the people on the streets really realize that their monetary sovereignty is at threat for the moment? So will they change for the very well-known, trustable form of payment, which is already quite widespread here in Bratislava as well, the card payment, the instant payment? So will they change for something new, something untested, just because they are told that the monetary sovereignty is at danger. So back in Hungary, we are not only dealing with the digital currency issues, but of course we are dealing with the fintechs and promoting them and have an everyday conversation. And we try to be very practical on discovering if and when we are designing a central bank currency, how the adoption will be driven by everyday people. And if we want to introduce some differentiator compared to what people already have, then we are convinced that we have to provide additional incentives for the usage. So we actually in Hungary already have a central bank digital currency operational since May this year. It's a pilot project. Maybe in the later round I will talk a little bit more on that. Thank you.
Thank you, Aniko. Now it's Vladimir Vaniu's turn.
To steer the debate a little bit, because my colleagues from the central banks are logically restraining what they can and cannot say. So, Johan, I heard that you really love your bank, right?
No.
You adore it.
No.
So now imagine, but still, you like to do transactions in digital form.
Definitively yes.
Which at the moment, to do your transactions in digital form, you need your bank account, you need your payment provider. Now, fancy this. Fancy you could do all your digital transactions leaving out your bank.
Okay, and
that's digital euro.
Okay.
To make it short. So when there is this popular debate, we must preserve the right of consumers to use the cash, because there's this popular saying, oh, when you pay in cash, it's, you know, the banknote stays the whole, you don't pay the fraction of the fee for the payment providers, for the bank fees, etc., etc., etc. So what digital euro is, digital euro turns the banknotes into a digital payment, which literally, and that's a little dirty secret of this whole project, could obligate the banks. The banks will need to find a value added, other than just providing the means of payment. So that's it. And to your initial question, do we need it? Very simple philosophical answer is no. We don't need to adapt, because survival is not mandatory. By which I mean, back in October 2009, we all overlooked it, because autumn 2009, that was the beginning of what we then thought was the biggest post-war financial crisis. In October 2009, there was a tiny academic paper published. There are dozens of academic papers published every week. And that paper was called The Concept of the Blockchain. 2009. The rest is history. I always like to show that between 2009 and 2019, from that paper, it became academic journal. The idea got its own academic journal within a decade. So back to what Mr. Ruczaj has said, not only we are obliged to adapt to the changes are happening at an accelerated rate. So the way I see not only digital euros, but also the other central bank digital currencies, CBDCs, is basically a legitimate answer of a regulated legal tender issuer to this whole blockchain technology. So very briefly, I actually think this is something that you will not hear. For example, the omnipresent payment providers really hate digital euro, and they would do whatever possible to delay its introduction. because that will basically put a significant strain on them. And in that regards, I mean, we got to keep our fingers crossed for the ECB and Magyar Nemzeti Bank and all the central banks in principle are experimenting with this because it's the next big thing.
Thank you, Vladimir. Obviously, as you say, it is a challenge for the commercial banks if what they earn from transactions will disappear. It's a challenge, as Dusan told me before we started. It will affect their balance sheets. There's no doubt about it. We cannot forget our speakers are online. I would like to invite first Peter Palos, head of the financial department in the representation of Slovakia in the European Union.
So I will try. Thank you very much again, Johan, and thanks also Finweek for the invitation. It's really a privilege to be part of this panel. I will focus in my introduction on political dimension and consideration of the digital euro, so the regulatory perspective. And if I may, I will guide you through 4 messages. Firstly, acceptance and awareness. Secondly, open strategic autonomy. Thirdly, inclusiveness. And last but not least, financial stability. And I will firstly start with acceptance and awareness. And I will use a quote said by Jeremy Powell, chair of the Fed, in 2021, when he was asked about the CBDC. And he said that it's better to do it right than to do it fast. And I think this is still very much valid because for the success of the digital euro project, broad acceptance of general public is needed. And in this regard, especially in Slovakia, we are facing quite huge challenge. And I will use one example. Last year, the Commission has conducted a consultation and they have received 20,000 comments, and 6,000 from these 20,000 comments were coming from Slovakia. And mostly they were very negative. There was much misunderstanding and even some conspiration around it. So I think communication in these regards is very much needed. And what is also very much needed is a democratic and very transparent process. And from this perspective, 2 very important milestones have been done this year. Firstly, just last week, the ECB has concluded its investigation phase and launched a preparatory phase for the digital euro, which will take at least 2 years. And secondly, the Commission has proposed in June this year a single currency package. There are 2 important regulations. One, the legal framework for the euro, and second, the legal tender of euro cash. These are ordinary legislative procedures, so there are ongoing discussions in the Council, between the Member States, and also within the European Parliament. And this will also, in my view, take at least 2 years for negotiation. And I think this process is really needed to achieve understanding and to achieve also acceptance of the public. Secondly, on open strategic autonomy. And this is, in my view, about 2 elements. Firstly, about competitiveness, and secondly, about geopolitics. Regarding competitiveness, we can follow that more than 85% of jurisdictions are currently investigating the possibility to launch or to introduce CBDC. And this is especially as the digital currency can be a driver for further growth and also for innovation, as it can help to have more effective payment system, which will be cheaper, faster, and easier. And in the case of euro, it can even underpin its international role. And on geopolitics, all of us follow the news. And when it's come to Europe, it's important, or the ambition is to overcome our reliance on private solution from third countries. So currently in Europe, more than 70% of European card payments transactions are done via third country payment systems. Thirdly, on the inclusiveness, what we are currently facing is limited access to cash, and it's reduced use, as what we can follow are closure of ATMs, even bank branches. So the intention of the digital euro would be also to increase access to central bank money, which will be available to all citizens and businesses, and even with the possibility to provide offline payments. And the second aspect, it's about interoperability. So to establish a single standard for all banks. So to establish a universal means of payments, as we are facing Europe, a very fragmented infrastructure, as there is no unique digital payment method widely accepted across Euro area. And last but not least, about financial stability, and it was already mentioned, digital euro is also about monetary sovereignty. The intention is to preserve the role of central bank money, to preserve the control over money supply, and it's also the intention is to preserve the role of commercial banks, which are mainly funded by deposit. Therefore, the intention when we are speaking about digital euro is to establish so-called holding limits, and also the digital euro should be seen as a mean of payment, not investment. So no interest proceeds will follow from holding digital euro. And let me finish by one very provocative quote. When Elon Musk was asked this year if he had concern about plans to move to CBDC or to digital currency, and the Twitter and Tesla CEO said, "I don't think they know what they are talking about." So let's show that we know what we are talking about. Thank you.
Thank you very much, Peter. Now, last but not least, we would like to invite Jonas Gross, Chairman of the Digital Euro Association. You will also be able to give your opening statement, and then we'll move on to the second part of the panel discussion with short statements and quick answers.
Yes, thank you very much. Thanks for having me. So I changed my audio setting and increased the mic. So from my side, I hope you can understand me very well. Thanks again for having me. Unfortunately, I was not able to make it to Bratislava. I hope so to join next year. And you will also, I think, hear now a few aspects which differ also from the previous panelists. So I totally agree that what is needed is a payment system that is, makes Europe more autonomous. So the topic of strategic autonomy is, I think, very, very important. It's also important to have a payment system that is resilient. So that's kind of the two key goals also the ECB has in mind for the digital euro. So I think that's super, super, super important topics to focus on. And if you ask me, the question, does it need such payment infrastructures? I would say yes, of course. However, I think what is currently not that heavily debated is also the potential alternatives, because we do see that there are countries, for example, like Brazil with their PIC system, where they established just, a different form of payment system without a different form of payment unit, right? So it's just an improved infrastructure for payments. And not just about a new currency unit itself. And I think that's very intriguing, at least to look at and to consider as alternatives, because this topic is, from my perspective, not really, not really debated a lot. Nevertheless, if there is the conclusion that a CBDC can address this better, as I said, I think from a central bank and public sector perspective, this is the way to go. However, where I'm a little bit skeptical currently is just the interest of the end user, right? Because we do see in Europe that there are very efficient payment systems. The people that like privacy, they can basically pay with cash. The people that like convenience can pay with, with Apple Pay, with credit cards. So it's a pretty good and pretty efficient payment market. And I think what it really needs also for the digital euro is very, very strong value propositions for the customers, so that they really download, the new ECB app then, or also use the digital euro within their existing payment rails. And a few advantages, for example, that can be reached is a very high degree of privacy, right? Because we don't have a high degree of privacy today in the digital world, which is comparable to cash. And the European Commission and the ECB also want to go into this direction, which I highly appreciate. However, what we also do see is that on this privacy-preserving form of payment, there might be limits, which could be, or there will be limits, and these limits can be very small. So what I'm not saying is not, well, I'm not saying that limits shouldn't be considered around the digital euro, but I would also say it's important that there is a trade-off between limits on payments and also the user, because a limit obviously also brings down the use of the digital euro. So I think that's what I personally would have expected after leaving the investigation phase from the ECB, to be clearer on this value proposition for customers. Nevertheless, of course, seeing the benefits a CBDC can bring for the public sector around geopolitics, about resilience, and looking forward now to the continued discussions with all the great experts on the panel.
Thank you very much, Jonas. Now we go to the second part of the panel discussion. Everybody had the chance to give their opening statement on the digital euro. Now we'll try to keep it with a little bit shorter and quick answers. We get some debate here on the stage as well as online. If we're looking at digital currency in general and central bank digital currency, what can the European Central Bank learn from the countries that are ahead of us in this development here? Or are they actually ahead of us here? So that's a kind of a controversial question. I will, of course, give that opening question to Dusan.
What we had learned from other countries. It's a hard question, because we are not comparable with all the other countries. We can't compare the Eurozone with, for example, not to be taken bad, with Bahamas, which investigates the digital currency. This is completely other project. We are one of the leading group of countries in the world. The euro is thought as well as one of the most important currencies, and we can't make the pilot projects like in small island country. Perhaps I'm not very skilled or not really expert in comparing with the existing CBDCs in other countries. I would not like to compare it, not to be unjust on where the other countries. Anyway, what I heard several times, the word privacy and anonymity. I have to repeat, I will repeat it many times. The privacy was emphasized during all the discussions about the proposal of the digital euros. Even it was discussed, it was always first remark during the last governing council, which decided to move to the next phase of the project. It happened 18th of October. It approved the results of the investigation phase and moved the project to the so-called first preparation phase. During this first preparation phase, we will make many examinations in a much more practical way, and we will perhaps solve some still open technical questions. I would like to say that we will not compete in the area of technology. It's not the task, not the role of the public sector. But what we can offer, which even Elon Musk can't offer, is that digital euro is a public tender. Legal tender, it's a public good. Elon Musk will never create something which is so safe and so acceptable as the currency of the Eurozone or Federal Reserves. And one important thing, it will be not obligatory. It will be not obligatory. It will be not obligatory. We will not change the cash. We will not change, we will not replace the other means of payments. We are adding something to it. we will increase the possibility of options. What the citizens can choose from the payment services. The most safe possibility.
Thank you, Dusan. The word goes to Anniko. Anniko, you have a strong opinion in this question, I think.
Thank you very much. So I would like to start with the statement that we have already heard, that approximately 93% of the central banks worldwide are actively researching the topic of central bank digital currencies. They are at different stages, and only a handful of the countries or the central banks have already implemented a fully fledged central bank digital currency. This mere fact is also symbolizes how complex this issue is, and how much they are in the search for real use cases that I was referring before, that why is it needed? Why the central bank has to overcome what the market already presents, either a bank or a fintech or anyone else. So actually one of the longest dated CBDC project is going on in China, and I think we can learn a lot from the Chinese example. I'm saying here that actually the Chinese government initiated the whole project because 95% of the payment transactions in China are managed by two big fintechs. And the Chinese government want to have a state control, let's say a monetary sovereignty on the payment market, with the fear that if there is any management problem or major disruption in one of these fintechs, then the whole payment market goes bust. So they have been starting piloting the central bank digital currency first in 4 main cities and then expanding it to 16, 20, right now it's 24 cities. And what the situation is that nobody wants to use it actually. So there are some appealing numbers of 100 million users and so on, but no real turnover behind this, because people are very familiar with the fintech-driven payment solution. They trust the current way of digital payment. They actually feel comfortable with this, and the only form the central bank is able to spread the central bank digital currency is to give it free of charge. So in the form of like red envelopes, they are distributing central bank digital currency free of charge in the amount of $6 or $8. And this is actually the only way of popularizing this kind of payment. So what in Hungary we are learning from all this is that we really have to identify why users would need this kind of payment. And right now we have identified use case, the digital financial inclusion of young people, of primary school year students who actually already have some financial issues, but they are only reliant on cash payments because legally they are not open or not liable for managing the finances individually. So we developed a mobile application and a whole CBDC platform behind this idea that we want to provide the first digital wallet of these young children and of course their families, because still the parents are legally liable for managing these digital wallets. And of course, we are offering some gamification, some quiz-based platform to learn about finances, savings, and to manage all the payments and finances of these young children under parental control. And we give some presents for those who are solving these quizzes successfully. So we do hope that we can learn a lot from this exercise. We can learn how to design a proper user experience, how to design the whole process within the central bank, how to cooperate with financial institutions, and how to talk to our present and future customers.
Very interesting. Vladimir, you have a comment as well?
I would rephrase your question. First of all, I believe that what ECB has achieved when it comes to the digital euro is quite advanced. Congratulations to the organizers of Finweek for bringing this important topic on the radar. It's just that it hasn't been that much spoken about before, but for many, many years in Frankfurt, every year, there are in-depth academic symposiums concerning the CBDCs, the central bank digital currencies. We don't compete against other countries or against other superpowers when it comes to digital euro. We actually compete, what Aniko has mentioned, against the private sector. My mom wouldn't really use the payment card, to be honest. She would go for cash. And guess what? A child born in October 2009, when the blockchain technology just was an idea, an inception, will be of legal age by the time when digital euro will possibly come into the circulation. And that child will not buy what we all are used to, you know, having a bank account, having a card to that bank account, and sending money through the intermediaries and through the IBANs and SWIFT codes and all this, what we grew up with. That child will want to have its currency digital, but in his own wallet, and will want to transact directly with other people without the use of intermediaries. And that's something that the blockchain technology, through all these private tokens, let's call them private tokens, has enabled. What digital euro is bringing it, the digital euro brings all the benefits of the blockchain technology with one crucial difference. It is issued by the issuer of the legal tender. It's not some, there are thousands of private tokens already available. It's actually an alternative. Yes, you can use this blockchain-based asset, let's put it this way, but it doesn't need to be issued by some kind of a strange Elon Musk or you name it. It can be issued by the highest, most trustworthy authority, which is a European Central Bank.
Exactly, there we all agree that it's a central bank currency, and a digital euro is no different than a paper euro or a coin euro. It's the same currency.
You can be sure that in 1 year from now, or when it will function, you will have the digital euro, and after 1 year, you can change it one-to-one to paper money. Are you sure with the Elon Musk money?
Absolutely not.
That's it.
And online panelists, anybody wants to comment on the question?
Yes.
Okay, perfect.
Thank you. Thank you, Johan. Just quickly.
Yes, Peter.
Just quickly, I very much also agree with Aniko that this is not about competition between public authorities, but it's competition with a private solution. And all of us can recall 2019 and the decision of Facebook to launch Libra. And this was a wake-up call. And there were very strong reactions in the Union, but also over the ocean in the US, because we were at that time unprepared. Secondly, on the comparison, I think no advanced economies currently ahead of Europe, and even countries which were front runners like Sweden have sometimes reduced, let's say, their activities, especially as it's for small economy probably more costly. But what does not work in a small country can work properly in the Eurozone, meaning the economy of scale. And from the countries which currently have already digital currency, according to my knowledge, there are 11, and indeed 10 of them are Caribbean countries, and one is in Africa. So just to know where we are on this. And last, to react also to Dusan point on cash. I would even think from a regulatory perspective that the role of cash will be strengthened. And that was also the idea of the Commission, why they have proposed new regulation on cash legal tender. So regulatory or from a legislative perspective, the cash will be strengthened, and also the monitoring as there will be set new obligation for member state to monitor acceptance of the cash. Thanks.
Thanks, Peter. Jonas, you want to comment as well?
Yes, and I'm very, very quick because you were looking for quick answers. So
Yes, I am.
So two quick lessons I'm seeing from current CBDC pioneers, let's call them. So we have seen, and Aniko mentioned that fully correctly, that they were not as successful as they wanted to be, right? So there were higher expectations. And we have actually also seen a CBDC like live 30 years ago in Finland, the Avant system, which worked for a few years and afterwards got canceled. And here I have two main topics to focus on, and I think what we can learn from these countries. One, it really needs all stakeholders on the table. So if you design this digital currency, and if you think about use cases, value propositions, it needs the central bank, commercial banks, the industry, the end user, associations, telecom companies, you name it. So it really needs all the voices on the table to develop something that is promising and valuable for all the different stakeholders involved. And I think that's one of the key reasons why some projects, like in the Bahamas, it did not really, reach the success that they wanted to reach. And the second thing, and this comes back to my introductory statement, is it really needs very strong benefits for citizens to use it. Because we've also seen in the Finland case that people simply didn't use it because A, it was very complex, B, it was very inconvenient, and C, in the end, they didn't see, when credit cards came up, why to use it. So this is, again, you will hear this more and more from me today, why we need this very strong value propositions for end users, because they are ultimately the users driving the adoption. And this is why they should definitely not be left out and should be also included in the process of designing such a CBDC. Thank you.
Thank you very much, Jonas. We also received lots of questions through Slido from the audience, but I have one more question I want to bring up with the panel before we take some audience questions. What is the risk of a digital euro being dead on arrival because private fintech already solved this problem at a cost that is so small? So why change the platform when the digital euro eventually arrives? Who wants to start with this question? Anybody can pick on it.
I don't think this is comparable. By now, we all know that there are cryptocurrencies out there. By now, we all know that they are super volatile. One of the three aspects of how to. In the past, in the history, there were all sorts of goods that could have been used as a currency. Yeah, we all know these cases in gulags where a cigarette was a currency. Could be. But one aspect of, or these three aspects for an asset to be called a currency, it needs to be stable in the value, it needs to be a unit of accounting, and it needs to enable transactions. So yes, the private tokens enable transactions. Private tokens cannot and will not compete with digital euro in terms of the stability. And that's I think, the key.
I have a follow-up on that. What if a private institution basically institutes a currency board backing their digital currency with real euro assets, for example?
Actually, just prepare for the next phase. Under MiCA from 2025, this will be a possibility in the European Union. So everyone, as a regulated institution, can issue a euro-based stablecoin. So you can already experiment with this until the arrival of the digital euro. So just back to the original question. Of course, we cannot foresee when and in exactly what form the digital euro will arrive, because I think we all refer to the fact that central bank digital currencies are not uniform, so they are different compared to what kind of needs they need to fulfill. So we haven't referred to the wholesale form of central bank digital currencies yet, which seem to resolve a real problem that interbank trading, especially in a cross-border format, are highly inefficient now and untransparent and really expensive. And this is a real market failure where central bank digital currencies can offer a solution for the future. So back to the digital euro as a retail instrument. So as long as it can fulfill real customer needs, and as long as it's introduced successfully identifying the proper incentives both on the user side and most probably on the merchant side, it can be a success. So everyone wishes that after so much effort and cost, it would become a success. I think we have to wait for the closure of the legal procedure by the time when we will exactly know how it will look like, except for those dimensions that the ECB itself will decide on later on, like the exact amount of these holding limits, for example. So we will see. At present, there is not so much difference from an ordinary bank account. And back to the safety, so actually the ECB itself supervises those banks who are issuing these cards. So if they are not safe, then we should regard something very special about this.
I was comparing it to cryptocurrencies.
Okay. But cryptocurrencies are not used for payment purposes. So the only way they can be considered is the store of value function, but neither the unit of account nor the medium of exchange function. Even Elon Musk didn't manage to set the prices of Tesla in Bitcoin because of these failures. So I had never heard of that. The ECB is issuing the digital euro for fear of the Bitcoin.
Dusan, please.
The question. I'm really not afraid that the digital euro will be that born, because it's not a sprint. It's more the marathon. It's going step by step. Every decision is taken after long and long discussions with the market participants, with the specialists. We take in account different opinions. I'm not caching that there are still some questions which are not resolved absolutely yet. It's prepared. It's the high-level description of the product of the instrument, but the rule book is not finished yet. It will be finished in the next phase. There will be some investigations, some pilot projects, and we will, of course, wait for the final legislation. What I said as an example, there are, of course, no roses without thorns. Everybody is perhaps at the central banks. We are happy with it. The end users, they are perhaps happy with the proposal. The merchants, I believe, will be happy because it will be cheaper for them. But there are still some important participants, which are the PSPs, the intermediaries, the providers of the payment services, mostly banks. And in this situation, I heard a very good sentence. We hope the project will be successful, but not too much. because the commercial banks are our friends. It's the tier 2 in the banking system. We can't replace the commercial banks with digital euros. It's still the first answer is the holding limits. But please take into account that 3,000 euros, which is just now the working amount of the holding limit, multiplied by 350 million citizens of the Eurozones, it's 1 trillion euros. It's too much. And we hope that not everyone will keep in his digital wallet 3,000 euros. Is here somebody who has in the wallet 3,000 euros? Oh. Anyway, the statistics is excellent. 1 from 50. It's good. We perhaps will find some better measure how big the holding limit is reasonable. The 3,000 it's simply the working figure. The other question: once the commercial banks holds the account of the digital euro, it's not the liability of the commercial bank. It's the liability of the central bank.
That's correct, and that's one of the questions I have from the audience. But first I want to give Vladimir a chance, and then the online panel.
Very brief intermission. When I was on the Ekonomiczne Forum in Krynica, I was amazed when speaking about the fintech environment in Poland, because most of these new startup ideas that were presented not even by university students, by secondary school students, brilliant ideas. So what I want to say, I'm sorry to say, we sitting here on the panel are a little bit, our parents didn't trust banks, they only trusted the cash in the mattress. We believe that you can't do without a bank account. The thing is, by the time digital euro comes, the new generation, the 18-year-olds, our children, will say, why should I open a bank account when I can hold up to 3,000 euros in my mobile phone, in my wallet, let's put it this way, and I can transact with that money directly, not using intermediaries, big corporations, and the bank. So in a way, it is part of the generation issue.
Even on the moderator, I think 3,000 euros is not that much money. I can't even buy a used car from another private individual with 3,000 euros. I will still need to be banked.
Good point. I'm not saying the banks will cease to exist. The banks as inevitable intermediaries for transacting will not be necessary. There's still be big transactions. Basically, what this will happen, we still remember times when the interbank transfer between the countries took 7 days and more. Now we wouldn't accept that. Now we accept 3 seconds with SEPA payments, or 10 seconds. So we made a huge step. I remember when I was paying for my TOEFL test, the fee was $35, and in the bank I paid overall like 57. The difference was the transaction fee. We wouldn't accept that anymore. So what I'm saying is the banks will be there, but their role will simplify to what is the core of the banking, which is selling confidence. You will have, and the new generation will have much more money than 3,000 euros, and we want to deposit it somewhere, we'll want to buy security somewhere, and for that they will need the banks. And then the banks will be the sellers, the buyers of risk, issuing the loans. And then it's irrelevant whether those loans are in euros, dollars, digital euros, whatever.
Okay, I give the word back to Dusan, but then I have to give the online panel a chance as well. Please, a quick reply now.
Very shortly. We are speaking about the future. In this phase of the project will long for 2 years. After that, it will be another decision of the governing council about moving to the next step, about the next phase. Where will we be in 2 years, in 3 years with technology and with the demands, with the opinions of the general public? It will be completely other world when now. We have to be always open, and we can't speak now about 3,000 euros like something, who knows, in 3 years. What I did not finish with the previous, I would like to emphasize it. The account with the banks in digital euros is not the liability of the bank. But should we not think about it like about some part of the obligatory reserves to make the life of the banks easier, commercial banks? I think that's the question for the one of the questions of the next months.
That's a very good statement. Yes. The online panel, anybody wants to comment on this question?
Yes, maybe
Peter, Jonas.
I quickly start, and again short. So I think there are potential risks that the digital euro could be kind of dead upon arrival, but again, coming back that the value propositions are not super strong for the citizens, so that is just not used when it's live, and then the success is not as envisioned. But what I currently don't see actually is, as I think also said in most of the previous panelists, is risk that some private initiatives take this over. Because what Eniko also said was that in the end, the digital euro, it's about a market failure, and what the central bank wants to achieve around resilience and strategic autonomy cannot, from my perspective, reached with a private solution. So there are, use cases for private solutions for stable coins, maybe when it comes to cross-border payments, when it comes to machine-to-machine payments, all that. So I think there are use cases, but I don't think that digital euro will address this in the beginning at the core. So I think that this private sector, competition from my side is not the main, potential hurdle, but it's rather the benefits for the citizen.
Thank you, Jonas. Peter, you want to comment as well?
Thank you. Yes. Thank you. Just also from my side, very quickly, 2 points. Firstly, currencies are about trust. So therefore, general public needs to be with us. And therefore, I am very much of the view that transparent process is in this regards needed, and also should we come to the point when there will be a decision about launching the digital euro, I may imagine that there will be a gradual, let's say, approach, and there may be some phases in introduction digital euro. Secondly, on holding limits, I think there is a full agreement that we should preserve the role of the commercial banks and the two-tier system which we have. On the other hand, we need to balance it with the attractiveness of the digital euro. So I don't think this is only a technical decision, or that this will be only the decision of our central bank. And I may imagine this will be part of our political discussion, and maybe also included in the regulation which is currently under our negotiations.
Thank you, Jonas. Peter, sorry, my mistake. Thank you very much, Peter. I will give the first question from the audience now, because it's very related. I know that digital euro do not want to replace savings, but even if people move their liquid money to somewhere, banks will miss it, because they need the liquidity. If banks miss the liquidity, they will have a problem to provide loans, and loans become more expensive. So that is something we have to watch out for.
So just to start, that's true. So actually right now, banking business has a very special character that banks are using people's money on the current account, let's say free of charge, or at least in Hungary they pay literally no interest on the money held at a current account. And that's really a special business model that might change either because of the introduction of the central bank digital currencies, and part of this liquidity will move into central bank managed account, or because people become aware that they are losing this interest if they are just parking their money on these current accounts, and they will invest it in some form, maybe at fintechs, maybe at other banks. So I wouldn't urge banks to relax and act as before, but they have to work for the attraction of the customers.
This is just a question, probably based on my lack of knowledge, but couldn't theoretically a customer deposit their digital euros in commercial banks and earn a small interest on them?
No. Digital euro will never be a programmable money and will not bear any interest. Definitely not. It's too dangerous, and it was decided once forever. It will be not programmable money. It will not prohibit you from using it for what you want, except AML reasons, of course, like today. But it will not bear interest. It will be not programmable, never. It's other form of the banknote. With the banknotes, you will not earn any interest, of course. It's other form, simply. It's the digital form of the banknote. No interest, no restriction, except AML reasons, and that's it. The limit, 3,000.
That's one of the questions we have here.
Yes, as I said, I'm a former commercial banker, and I feel it very, very sensitively. It's a word which is much used now. Anyway, I think I know about it. I know the problematic. Understand the problematic. 3,000 euros multiplied by number of the current accounts, it's something which is significant for the commercial bank, really is, and we have to think either of the limit, but it will not solve the problem definitely, either of how we can be just, because it's a little bit about the justice. When the commercial bank holds the banknotes, in fact, it's not liability of the commercial bank. It's really some part of the obligatory reserves. It really is. And which part? Because when you withdraw from your banking account 1,000 euros and you return back 500, which part of these euros is still with the bank, this 500 in general, during the month? We will see how much of the virtual wallets, of the wallet with digital euros, has the minimum amount. And that can be counted like something stable. That can be counted like part of perhaps a part of obligatory reserves. And I'm sure that will help the commercial banks. Of course, not 100%, but it will help. We understand that the commercial banks need the deposits for offering the loans, it's clear. But as well, the citizens have the right to withdraw the money from the account in the bank. Like now, they can withdraw the physical banknotes. In the future, they will withdraw in the virtual wallet like a digital euro. Well, but we have to make it not without limits. Because of course the money of the central bank is legal tender. It's much more safe. We can't replace the commercial banks with accounts with the central bank. It's not intended like that. Never will be.
Okay, last comment on the question, Vladimir.
Even in 2023, you have people who want to do their transactions without banks, in cash. Even in 2023, you have people who believe that the only safety is cash in the mattress. They are just... there are such cases. I heard a case about the pensioner lady who really was stacking all her assets into the mattress. Just these people are dying out. So back to your question, we need to think about the adoption of digital euro partly really as a generational change. So exactly when there was a generation, when payment cards were introduced, there would be a generation that would never ever touch the thing. And then there was a generation who can't really imagine living without a payment card. So the way how I imagine adoption of the digital euro is that it will be partly a generational change, partly because, again, these crypto assets, the kids, before they are allowed to open a bank account, they can online play with all these digital assets, and they are conversant in holding some sort of a token in their crypto wallet. So then when they come of a legal age, they will very automatically will consider like, why should I carry the banknotes or the plastic cards when I can carry official legal tender in the form to which I'm already used from playing the online games, etc., etc.
Yes, that's clear. Now I have another question from the audience. Digital euro do not want to replace current payment systems. But for me as a consumer, the current system is comfortable with instant payments. So what's the motivation of using it? And here I would like also to add, in many countries, there are phone apps where you can send money between private people easily, instantly, which are connected to your bank account, however. So many users probably not even see the difference if they're paying with digital euros, or they're just paying with an app on their phone that is connected to their bank account, which will have much higher transaction limits for that matter. So what is the motivation for the usage?
So actually, just referring back to your previous points, for the digital euro, you do need a bank account, and there would be a funding and defunding procedure. So this possible 3,000 euros limit will not be a hard limit. So if you want to buy a car, you can just start proceeding with central bank digital currency, and then the amount above the 3,000 will be withdrawn from your ordinary bank account. So actually there is not so much visible difference compared to the current case when you do need...
exactly, so where is the motivation?
So probably the main difference would be, as we have heard before, that since the digital euro will be a legal tender throughout the Eurozone, everyone will have to accept it. So this is another question, how the ECB will enforce this, that every shopkeeper at every corner will be accepting digital euro, but that's the other operative question.
Nico, that's a very good point, because the payment systems I described a minute ago, they are national and they don't work across national borders in the European Union, while a digital euro would be universal within the whole Eurozone and maybe in some affiliated countries also outside the Eurozone, I could imagine.
So actually, the main advantages would be that there won't be, let's say, walled gardens in the form of specific payment providers who do have the ecosystem, but no interchange between the other ecosystems. So it will be a unified payment area, which, on the other hand, is already, let's say, prepared with the instant payment initiative in the Eurozone anyway. But we will see which form will become more successful.
I would like to continue with the audience questions. Who would benefit most from CBDCs? And I do not think it should be the central banks, as they don't thrive for profit, but for the stability of the currency. Okay, Dusan.
Who will profit the most from digital euro? I don't know.
What about the merchants not having to pay the credit card fees?
In 3 years, the environment will be different. I strongly believe, I'm sure that the merchants will have better conditions. I strongly believe that the citizens, the end users will have better conditions. I'm sure that the IT companies will produce better and better solutions for the intermediaries, for PSPs. I hope everybody will profit from that. And I return to the previous question that I heard that people are satisfied with instant payments. I like to hear it, and we will not replace it. Instant payments will be used for settle the transactions with digital euros. We will use as much the existing infrastructure as possible. That's and the euro system will keep the costs for the transactions for using.
Just one quick follow-up on this question
Tips will remain.
How could banks stay competitive against the free use of digital euros?
I'll just help Mr. Ruczaj adding this. Who will benefit is a little bit deceiving question. 10 years ago, or I don't remember exactly, we took it as given that when you make a payment transaction, you need to have a piece of plastic, you need to have a PIN, and you need to enter the PIN. Nowadays, we take it as granted that you actually go contactless, and nobody even think about it. I remember when contactless payments were introduced, there was a big havoc in the banking sector, like, how can you trust it will be safe, could it be misused, etc., etc. So the way I view digital euro as part of this this technological transformation, and Mr. Ruczaj made it a good point, that really we maybe can dream about what technology will look like in 3-5 years when this become possibly reality. To your question, the banks have been on the beaten side of the technology when it comes to payments for long. So as I have mentioned, you know, charging $57 for 35 TOEFL fee is no longer, but that was the reality back in the past century, let's put it this way. And again, the transaction part of the banking is shrinking and will be shrinking. The most vivid example, Aniko and Mr. Ruczaj will remember that, interbank transactions, the spreads that were there, bid-ask spreads, Now this is being done by the robots at very tiny margins. We couldn't even imagine that that would be possible back in the past century. What will remain with the banks, and there the banks will be irreplaceable, is this core business, selling confidence. So selling confidence to the consumer, you can deposit your assets with us, and we will take good care of those assets, better than in the mattress, even though there are still people who trust mattress better. It's just our generation. And the second part of the banking is this buying of risk, that yes, I assess you as creditworthy to receive a leasing for your car, a mortgage for your house, etc.
Anniko, please.
Yes, so just who will benefit? You cannot predict actually, but we will watch and see, because it will be a really exciting experiment with 325 million people in the Eurozone. So in Hungary, we have taken a different approach. We have a couple of thousand real users where we can experiment freely with our system. We have developed the whole process, the whole accounting at the central bank. We even have a line in the balance sheet of the central bank for CBDC. We have the whole ISO 222 standards used for the transactions. It is interconnected to our instant payment system, and it teaches us a lot how to deal with customer needs, how to deal with customer complaints, how to give a really convenient AML KYC process, so that to provide the platform for our users. And we are already giving CBDC to the future users of payment services. And we are not competing really with the banks, because this age group is below that age group that banks are targeting based on profitability reasons. So we do believe this is a win-win situation right now. And just one fact, that in India there is also a CBDC project where the central bank placed a pricing cap what the payment providers can charge for the users. And this resulted in underinvestment in cybersecurity by the market providers. And people don't really trust the CBDC ecosystem, and they only pay for their cafes or for their lunches with the CBDC, but they remained with the private solutions with proper security standards.
We have less than 5 minutes left, and I have one more important question from the audience, and then you can give your final remarks, please. That's a question of privacy. What is your take on the opinion that CBDCs may give governments unrestricted control over finances of individuals, thus creating a totalitarian environment?
I can start with a very short answer, which I like to use on that topic, because the topic of the privacy and the digital payments is full of myths. Even if you use these bulletproof cash solutions, please take into account that every single of your banknote has a unique ID number. If you believe that your cash transaction is untraceable, good luck with that.
And going further on this road, so under the current card-based payment schemes, your bank and your card issuer knows where you are, what are you buying, who is surrounded by you. So why people would trust their central bank less compared to MasterCard and Visa?
By the way, MasterCard is one of the biggest sellers of data to the US government, just as an example.
This question of privacy, it's always one of the first questions, and it was one of the first answers of every governor of the last governing council. We strongly promise that the privacy is one of the most important things in the project of digital euro. Really, Eurosystem is not caring about selling the data. Really, we do not need to know what did you buy for 10 euros or 2 euros in the cafe house. Anyway, everything which is done online, everything which is paid online is submitted to AML standards, and it is even so just now. Everything what you take out for your digital wallet and everything you pay offline is the same like with cash. Simply after several transactions, your PSP provider, PSP, will see that your balance changed. That's all. Like when, it will be the same like when you withdraw the physical cash from the account and after you deposit the rest of the cash on your account. The privacy will be as high as possible with the instruments and with the things like phones and nothing less, nothing more. But nobody cares about the offline transactions.
Okay, we're running out of time here, and I would like to give the online panel a chance, maximum 1 minute each, to give your final remarks on the digital euro, central bank backed.
Final remark for one minute.
For the online participants who have not been with us for a while here.
Yeah, then maybe I just start and be quick. So I think it's very important to talk about these topics as conferences like today, because I think it really concerns everybody from every sector, because it will be legal tender, so it will be in all of our lives. So I think it's great that you have this so prominently placed at this event. I also think that it needs discussions with all the stakeholders, as I mentioned. There are really needs strong value propositions also on the privacy side, because this is it's definitely not a technological topic. It's a political topic, right? How much privacy you want to enable and how much you don't want to enable. So I think this should be at the core as well. And I'm really hope that also around the digital euro, this privacy, this threshold for more private payments, the offline ones we heard about, that the limit will be rather high, so that people can also, make use of that in their daily lives and not just, for paying a coffee for 5 euros. Thank you very much.
Thank you, Jonas.
Thank you.
Peter?
Thank you. Briefly on privacy, just one point that privacy is not anonymity, and this is what should be also considered when we are speaking about it. And I see the privacy as an advantage for the digital euro, because it was already mentioned, and the intention is to have a better solution for the digital euro compared to other private solutions. I would like to come back also to the previous point on the benefits, and I would like to add one more, and that's the digital euro could be also a catalyst for innovation in Europe, or at least in Eurozone, where unfortunately Europe is so far lagging behind. other countries, especially US and China. And to end and recall also Jonas' point, digital euro is also a political project. So I think full and transparent and democratic process is needed around it, including all the consultation and etc.
Thank you, Peter. We have to round off this first panel discussion right now. And we didn't have time to take all the questions from the audience. I recommend you try to meet up with the panel members at the coffee tables in the break and talk to them directly. A big thank you to our panel members.